Hi, I'm Ed Heiser, your Southeast Valley real estate agent, and we've all seen and we all know that mortgage interest rates are going up. We also know that as mortgage interest rates go up, well, that affects a home buyer's monthly payments. So come with me and let's take a look at mortgage interest rates and just how they affect our housing market. I keep my finger on the pulse of the real estate industry from several different avenues afforded to me because I'm both a real estate agent and a licensed loan officer. This allows me to bring a unique blend of knowledge, experience, and resources to you. So let's talk interest rates. We're seeing the Fed is raising interest rates by 25 basis points or 50 bips. And you're like, scratching, what the heck's a bip? So let me translate that all into English for you, okay? So when we hear that the Federal Reserve is raising their Federal Reserve rate by 25 basis points, that's just jargon for saying the Fed is raising their federal rate to 0.25% or 1/4%. That's all it is. And no, it does not mean that mortgage interest rates are now going to go up from, let's just say as an example, 5.0% to 5.25%. No, because the Fed rate they're not related to mortgage interest rates. Guess what moves mortgage interest rates up and down? I'll give you that secret. It's a big secret. MBSs. What is that? Mortgage-backed securities. That is what moves interest rates up and down, mortgage-backed securities. So a lender gives a bunch of loans, whatever the rate might be at that time, let's just say 4%. They'll bundle those, all kind of like loans, and then they will, sell them to investors on the financial markets as mortgage-backed securities. They are securities backed by mortgages. They're mortgages. And when the mortgage-backed securities yield goes up, understand that's good for investors that have mortgage-backed securities. So it's going to inversely affect rates. So as yield goes up, interest rates go down. And if mortgage-backed securities yield goes down, well, then that means that interest rates go up. So that's the mystery. That's it. So the Fed rate has nothing to do with mortgage rates. The Fed rate is simply the rate which Federal Reserve lends money to other institutions. That's what the Fed rate is. Now, when that Fed rate goes up, it's financial news. Think of it as a rock hitting the financial waters, and it sends ripples through the markets. The markets will now react because some things in the financial markets, that's a negative impact or it's a positive impact. Everything is a little bit different. So when the Fed announces they're going to raise rates, a lot of people and talking heads panic. They're going to raise the rates, and that sends negative waves through that financial pond, and that affects mortgage-backed securities along with everything else. So that's how that all works. I know it's probably as clear as mud. Now let's take a deeper look. So right now, today, this is the beginning of June. So let's take a look at this chart. Interest rates at the end of May, as we can see here, were around 5.25%. Okay? And that's up from 3%, just a short time ago. So let's take a look at this. A home That is selling for $500,000. If you bought it in December in 2021, the rate was 3%. Your principal and interest payment would have been $2,108. Okay? Now in May, with interest rates at 5.25%, that same $500,000 home would have a principal and interest payment of $2,761. In order to make decisions, we actually need to have a little bit more information. So come with me now and let's take a look at recent history, okay? The highest interest rate ever happened in October of 2081, and that rate was 18.65. Now these are all from Freddie Mac, so they're conventional loans. And the lowest rate ever was December of 2020. That's a very short time ago, and those rates were 2.68%. So that's interesting history, what's the highest and what the lowest rates have been. So let's take a look at rates where they've been from 2009 to 2022. And it's looking at this chart, see this gray line here at the top, that's 5%. So we can pretty much so say that the average interest rate from 2009 to 2022 was 5%. You see where we're going here? So we're all panicking. Oh no, interest rates have gone up so high, acting like this is the first time that we've ever had an interest rate of 5% and that no one ever is going to be able to purchase a home again. I always just scratch my head at that and I'm saying, are you serious? So you're telling me that just a couple of years ago, November 2018, we're basically at 5%, that no one was buying houses then because the interest rates were too high? Well, just a few years after that, in 2020, we hit historic low interest rates of 2.6. So this is a shock to a lot of people because people don't pay attention to interest rates usually until they buy a home, and then they look at the interest rates at that time. So I just wanted to bring that to light, that so for the last 13 years, the average interest rate, it's about 5% there. So let's take a look at interest rates now from 2001 to 2008. We can see here that mortgage interest rates averaged 6%. See there in November 2021, you can see there that the interest rates were at 6.45, and then they dropped down almost to 5%, came up a little bit, then they went back to 6 and rode 6 for a little while. So that was, you know, for a brief time from 01 to 08, the average was roughly around 6%. Now I got involved in mortgage financing around 2002, and we have said since then, you know, for basically the last 21 years, that mortgage interest rates are at historic lows. Now, when we actually look at the history of interest rates, the reason we look at the history of interest rates is because you can actually analyze what interest rates are doing, and that way when you are now looking into the future, we can't predict what interest rates are going to be, but we have an informed idea of what they're going to do from what they have done in the past. And so let's take a look at mortgage interest rates from 1971 to 2022. And as you can see, yeah, they're in 80, 81. You know, we hit that all-time high of 18.63. My mom and dad bought their second home in 1980, and they got a 16% interest rate, and they thought that was great. And my wife and I, when we bought our first home, we got an 8% interest rate, and we thought that was great. If you look over this 51-year history, you can see, like right here in January of 1978 and around 1973-ish, You know, it was 9%, 9%. Then in 87, you see 9%. So you can see that, you know, the interest rates kind of banged on that as a floor and as a ceiling there through 94 is 9.25. 2000, we're about 8.62. So if you run that line 9% right across there, you know, you can basically say that that would be the average over that 51-year span. Yes, the rates have obviously gone lower than that, and that's why interest rates are still historically low, below 6%. And all we're doing is, when you get normals, you know, that's what we talk about, the, you know, supply and demand in the CMI. We talk about a normal market and being about 100. Well, right here, if you're looking at the history of interest rates, you can pick a time frame that you would like and call that normal. And all the interest rates, we went to an incredibly low, never before seen low, you know, of 2.6, and, you know, here in 3 and 4, we're seeing these lows, and that has happened for such a very short time. And a lot of people think that's normal, and we're crying, oh no, we're at 5%. But if you look over this, you know, 21 year history, all it's doing is coming back to normal. We're coming back to around 6%. Now I'm going to show you something that is even more interesting. Here's mortgage histories going back 122 years. You can see that line right there at 6% running all the way across. And then we now hook it up to this Freddie Mac one. And remember how I said, you know, 6%? If you can see, over that 122 year history, we will call 6% pretty much so the norm of where interest rates are supposed to be. So yes, are interest rates rising? Yes. What are they rising to? They're rising to their normal levels. People have been buying homes for 122 years at an average of 6%. So a lot of people panicking and saying that people will never be able to buy homes again because rates are above 2% or 3% or 4%. I would say, people have been buying homes for 122 years at an average of about 6%. As I said before, my mom and dad bought their first home at 16%. If we look at this chart, how long did they stay at 16%? Well, not too much. It was down to 12% 9 months later. And then a short few years later after that, it went all the way down to 9%. Guess what my mom and dad did? They refinanced into the lower rate. Guess what a lot of people did when they went down to the 2s and 3s? They refinanced. That's all you do. A lot of people, consumers, are more concerned about their monthly payment than they are where the price of the homes are and the interest rates. Because over the long term, homes have always been a great investment. It's better than renting. You build equity. Yes, even if you look at a history graph like we've been doing here with rates of home appreciation, even in those years, people that actually owned their home before, during, and after that have actually gained a positive increase in equity over that long period of time. So I would recommend to all of my clients that don't sit out and wait for the quote unquote bottom of the market. Because again, as we see here over this 51 year history, if we wait for 2%, it only happened once. If we're scared that it's going to go to 18%, it's only happened once. I think our housing market is great, it's strong, and I wouldn't bank on historical one-time one-offs that rates in 2020 went to 2.65% and wait for that. I think you'd be waiting a long time to see that again. I can't predict interest rates. I never claim I can. I don't have a crystal ball to see in the future. If I had one, I promise I'd let you take a peek. So I think we have a great market. I would love to talk with you. I would love to take you out and show you some homes, help you find the home of your dreams. If you'd like to look at current homes on the market right now, click my link below in my resource button and take a look at my MLS and the homes that are currently on the market. Supply is increasing. As always, remember, I'm just a phone call away.